area is stablecoins. And Senator Haggerty, he's on the banking committee. He just released a stablecoin bill. There's counterparts in the House. And what the four chairmen indicated is actually they're going to take up stablecoins first, and then market structure will follow very quickly. So I think we could see a stablecoin bill pass Congress in the next several months.
I began my Bitcoin journey about 5 years ago, and I've been tarred and feathered and praised as it goes up and down, and you oscillate between genius and dummy. But I think it'll likely happen at a small level. I think David Sachs has been very smart to delay it. I think the executive order showed good judgment because you want to get the buy-in from the Republicans and the Democrats, not just one party. You'd hate to see a strategic reserve going into place, Republicans lose power, and then the Democrats pull the rug on Bitcoin and take it out of the strategic reserve. I think you need to get buy-in on both sides. I think it was very smart of David Sachs to make sure that there was a 6-month debate and 6-month analysis of this. But I do think you get something. Remember, we have 27 other things in our strategic reserve. It's not just gold and oil. There's trace minerals and other things that the country reserves. I think this is an asset that the country will want to own. Well, we do own ETH in small sizes. We're much bigger Solana fans than we are ETH. We don't have a negative opinion of ETH. My partner in law school classmate John Soulos is sort of an ETH maximalist, so he's got it in our portfolio. I think that Brett Messing and I just think that Solana is faster. It has lower gas fees. And I think it's the one that's going to win the race, if you will, in terms of going into the tokenization world. Right. If Larry Fink is right and we end up tokenizing stocks and bonds, I think Solana would probably be a more obvious choice.
Administration is in brainstorm mode when it comes to containing the massive budget deficit. On the table, revaluing the country's gold reserves and creating 50 to 100-year bonds.
So in 1934, the Fed transferred their gold holdings to the Treasury and in return got this gold certificate. In 1973, that gold, which totals about 260 million ounces or 8,100-ish tons, was valued at $42. So on the books of the Treasury, right now the gold's worth about $10 billion. But in reality, with gold at around 2,900, those holdings actually total north of $800 billion. So I'm hearing chatter, and the Financial Times over the weekend in an editorial talked about the possibility that the Treasury, in a relationship with the Fed in terms of gold certificates or maybe a repo or other ways of basically injecting the difference between the current mark of 10 billion, the current old mark really of 10 billion and what would be a new mark at 800 plus billion, and that cash would get injected to the Treasury general account.
For gold, but it just puts a spotlight on what gold means and the importance of it. And I think the bear case people say, well, that will allow them to sell it, but I don't think that's really what's going on at all. I mean, if they were to sell it today, they would reap the mark-to-market gain, so it's not really where it's valued at. It's just putting a spotlight on the importance. Can you speak to that?
They have no interest in selling gold. This is just on one hand, the criticism can be it's an accounting gimmick. It's a one-time thing. It's a one-time injection of cash. But I think the administration is looking at a variety of different things to deal with the excessive debts and deficits we have. I mean, Scott Bessent, when he said he's focused on the long end, he was not kidding. He's looking at many different things to keep the 10-year sort of in check and not to see a retest of 5. Because if you blow through that, you're talking 5.5 and 6. He wants no part of that. So they're looking at a lot of different ways of trying to avoid it.
And speaking of long end, I mean, in your note, you're talking about an even longer end, a 50 or 100-year bond. That idea was floated in the first Trump administration, never happened. What are you hearing now in terms of existing bond holders, Treasury holders, being able to swap out for a theoretical longer-term bond?
Yeah, so this would not be sort of your standard Treasury issuance, let's sell 50 to 100-year bonds, because we know the liquidity there, as seen with the 20-year, is pretty thin. This is something, again, trying to be creative on their part about swapping or trying to convince foreign holders of Treasuries to swap some of these holdings for 50 or 100-year Treasuries. that they would have limited ability to sell. The Fed would then create a potential facility allowing them to pledge that if they wanted to repo it. But the Financial Times article talked about this and sort of strong arming some of our foreign friends and their holdings to take this 50 or 100-year paper. Again, another brainstorming exercise trying to term out our debt and even make it zero coupon so they don't have to pay an interest expense on it, of some of the things in dealing with the financial situation that we're currently in right now.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have David Sachs on stablecoin. Says a bill could be passed in the next several months. And of course, the stablecoin bill is bipartisan. Democrats and Republicans always come together to push the agenda. Remember, stablecoins are nothing but digital dollars, but they're going to be programmable. Being able to tell you what, when, and how to buy, and you have 3 to 6 months to spend them, or poof, they're gone. And we're going to touch on that later on in this video on how important that's going to be to the plan. And we have Scaramucci on David Sachs delaying the Bitcoin reserve, saying it's a good thing. But guys, we know the central banks don't want a Bitcoin reserve. And then he talks about owning Ethereum. But we know also that JP Morgan has his hands all over Ethereum. And if you look at the Ethereum's ecosystem, DeFi is definitely the new banking. And he talks about Solana, faster and low fees, which will be great for tokenization, especially if Larry Fink is correct when it comes to stocks and bonds. And we know everything's going to be tokenized and put on blockchain. And remember, the Crypto Teacher told you. And we have Scott Besson, the hedge fund guy, may get his hands on the gold, working a accounting gimmick. They may use gold to keep these yields down. And then we have the 50 to 100-year bond strategy comes back up. And you guys know I've done plenty of videos on it. When Trump was in office, he had an opportunity to do it, but he didn't. Janet Yellen had an opportunity to do it when she first got in, but didn't. Now, of course, guys, nobody even wants the 10 to 30-year bond because they know the United States dollar is over. We printed 80% of all money in existence in 2 years to speed up the death of the fiat. Now they're ready to take these digital assets and put it on top of the current system. And we do have stablecoin issuers buying treasuries, but they're buying them short term. And the only person that's buying this long-term paper are central banks. So if they do decide to do the accounting gimmick with the gold, then they can use these stablecoins. But on the other hand, the hedge fund guy can just take all the gold. And remember, the Crypto Teacher told you. Now we have Canada speaking on the United States tariffs, and behind them it says Canada is not for sale. But we know Canada and the U.S. consumers will be hurt, and like he stated, China would be laughing. And we see China putting on tariffs of its own. And never forget, this is all part of the plan to get us moved over to this fourth industrial revolution. Crush this legacy economy so the digital economy can rise. And we have Trump pauses enforcement of overseas bribes. And yes, guys, you heard that correct. You can't make this stuff up. But Trump is moving this fourth industrial revolution a whole lot faster than I would have ever thought. But we have all the technology ready. Only thing they need is that one crisis in order to bring in the machines. And remember, the Crypto Teacher told you, because he knows when it comes to the NWO, it's all planned out. But guys, all I have for you. Don't forget about the books.
Remember going back to whether it was going to be 100% tariffs on Teslas if that first round of blanket tariffs went through. Is anything like that being discussed now if it's steel and aluminum?
Well, that's the last thing we want to do, but we will retaliate. And, Canada will feel the pain, there's no doubt. But I can assure you, when we retaliate, the Americans will feel the pain. And for what reason? There is no reason. Our trade with Ontario is split equally down the middle. We do approximately 500 billion Canadian going both ways. And if you take energy out of the sector of trade federally, then all of a sudden now you have a $45 billion surplus on Canada. And we're the number one customer to 17 states, number two to 11 others. Ontario alone. Canada, we're the number one customer to 28 states. Why would you go up and attack your number one customer is beyond me, but there will be retaliation. America loses, Canada loses. I'll tell you who wins is China. China's sitting back laughing, and the whole world's laughing, watching two of the closest allies in the world, go at each other. It just doesn't make sense. I know that America needs our critical minerals because China's cut them off. Who has the critical minerals? Ontario and across the country. They need our energy, our oil. They need our electricity. Ontario keeps 1.5 million lights on in New York and in Michigan and in Minnesota. And the list goes on and on and on. And we need each other, and we're stronger together.
China imposing retaliatory tariffs right now on the United States, hitting billions of dollars worth of goods and energy resources. I want to get straight over to Eunice Yoon this morning. She is in Beijing with a report from what's happening on the ground there. What are they saying?
Well, Andrew, those Chinese counter tariffs are now in effect, but they probably aren't going to be meaningfully damaging to American businesses because they are limited. Unlike President Trump's tariffs, which have been blanketed all over the Chinese companies, these ones from China are targeted. Goldman Sachs estimates that the Chinese levies cover $14 billion of U.S. exports to China, so that's only about 10% of the overall amount of goods that the U.S. Shipped to China last year. But what we do need to watch is any signs that China is willing to retaliate in very different ways. Unlike President Trump's first term, the Chinese have already been signaling that they're willing to single out individual companies. Over a week ago, as part of these countermeasures, China announced that it's investigating Google on antitrust allegations, also blacklisting Illumina, as well as PVH. And then last December, it also launched an antitrust investigation into NVIDIA.
President signing an executive order related to the Foreign Corrupt Practices Act, according to a White House official. Now, that's important. That's the law that makes it illegal for American companies to bribe foreign officials overseas. What President Trump is going to sign, I'm told, is an executive order that pauses enforcement of that by the Department of Justice and the Attorney General until they can issue new guidance about how they're going to enforce the FCPA, the Foreign Corrupt Practices Act, going forward.
Now, going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. with triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence.
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.